All right, so I welcome you all once again to today's class. Today's class, we are going to look out for designing of a scheme of capital reduction. So we said that you'll be asked to prepare a scheme of capital reduction and reorganization. We need a scheme. Scheme simple means formal plan, as we saw last meeting. Now, last meeting, we actually look out for, we can look at it here, where they'll give you a scheme and you will prepare the resultant financial statement. So we solve a question called Kumasi Shoe Factory. So and this question has dropped 2 times in the ICA. And we hope the third time will happen immediately before the syllabus is ended or the new syllabus, second sittings in the new syllabus. All right, so we look at the Kumasi Shoe Factory. In that case, they have given you the scheme and you have to just prepare. That's why we call it a double entry. If you have not gone through all that, please take notice and go through that and be sure that you are up to date with all our materials. Please, and please again, not only this you need to know, these are the lecture videos on capital reduction part 1. Please, they are in order. Part 1, part 2, part 3. Today's own will be part 4. That's the final section of capital reduction. Go through it. Ethics is there, IFRSs, and all the special question solving too. That's the Dawn classes are also there. Please make good use of our material so that you can get a benefit of it. We also have the books and the past questions too as well. That is, we can talk about the books, please. The books are also here, both the ICA books, ACCA, the new books, and then the old books are also available. Aside that, we also have all our lecture notes. If you're looking for target lecture notes, you can also come here to look for our lecture notes. The notes are here. All the notes are being uploaded nicely for you. And aside that, we also have a very nice questions for you. For the questions too, we have ACCA past question, ICA past question, and target own questions. All of them are up to date past questions. They are marking schemes as well. So when you open, you have yourself. ACCA too, we have international and UK exams. All of them are available. Please try your hands on them since our exam is approaching. All right, so let's go back to today's section. Today's class, we are just going to continue with the story. You see, there are 2 issues with your exams questions. So when you say business reorganization, there are 2 issues here. We need a scheme for reconstruction. We need a formal plan. It's called scheme. We need a scheme for reconstruction. Scheme. It's called formal plan. And there are 2 ways for the exams. These are your exam questions. Number 1, the scheme will be given to you as you saw last meeting. So you only prepare the resultant financial statement with a given scheme. With a given scheme, you prepare a resultant statement of financial position in which you've done that. Again, then today's class, we are going to look out for how to design a scheme. So this time around, we are going to design the formal plan from the scratch. We are actually designing our own formal plan. So designing of a scheme for capital reduction is what we are going to look out for. So take note please of that. So designing of a scheme. So today's class, we are going to learn how to design capital reduction scheme. Designing capital reduction scheme. Designing of capital reduction scheme. Now, there are 6 standard steps in designing a scheme. You must know them. Step 1. Each and every step have its main purpose. The very first step is to determine statements of liquidation. So you prepare what you call statements of liquidation and the position of the key stakeholders. It includes the position of the key stakeholders. Statements of liquidation. Purposely to explain the position of the key stakeholders in event of liquidation. That's all. To explain the position of the key stakeholders in event of liquidation. The second aspect is that we also look out for determination of maximum capital loss. Determination of maximum capital loss. Determination of maximum capital loss. All right, the third one we will look out for. See, these 2 stages, any of them can come first, doesn't matter. So in some book, in some write-ups, determination of maximum capital loss comes first. It's not a problem. Any of these 2 steps can come first. What matters is that you are doing them the first 2. But the third one will take its rightful position. So over here, you see, to proceed with the reconstruction, you need to know if we are to liquidate the company right now, what's the total loss? So let me just give you a scenario. If the total loss per liquidation, is, let's say, 2,000. And the maximum capital loss also represents the total loss if you are to do revival. If you want to bring your business back to life, what should be the total loss you must claim? So capital loss. Let's just assume that it's also 3,000. Which of these loss is cheaper? Of course, liquidation is cheaper over here. So here, you liquidate the company. Please don't assume that, and don't come and tell us that, don't come and tell us, that, 'That, 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 If you publish your dying company, at least you get more money in the near future. If you save your dying company with a cost of 3,000, it's far better than collapsing it and losing 2,000. No, we have factored everything into consideration. So here, bear the numbers and figures, liquidation is far better because it's cheaper. So at this stage, we will determine as to whether we should proceed with the reorganization. Because if it is very cheap for us to liquidate, then we'll liquidate and stop this reconstruction. If the reconstruction is cheaper, of course, then we'll now do the reconstruction. So determination of maximum capital loss. For example, if the capital loss is 2,000, liquidation is 5,000. Oh, then I'll select capital loss because at least reviving the business is cheaper than what? Liquidating. Sometimes liquidating is not a better option. So we have no choice than to revive the business. Now, after you are very sure that reorganization is cheaper, then you now proceed to the next step. If reorganization is not cheap, don't even waste your energy, your time to continue. You end the story there. You not sure. Sorry. You share. So share of maximum loss or maximum capital loss. So now you have to share the loss to the key stakeholders. Step 4, you now tell the examiner resource requirement or capital requirement. Resource or capital requirements. Step 5, proposed scheme. It's a story, write your proposed scheme. Proposed scheme. Then step 6, you now tell us. We call it the resultant. The resultant statement of financial position. All right, so these are the 6 steps. So tonight I'm picking one question to illustrate these 6 steps for you. In exams, you may be called upon to do any of them. You may be asked to do any of these steps. You may be called upon to do any of these steps. So please let us take notice of that. All right, so that is that. All right, so that is that. So now we're done with statement of liquidation. We've done it during our first meeting. So I'm going to pick one of the questions called iodine and use the iodine as a test case to illustrate all these 6 steps for you. So there's a question that we are going to look out for called iodine. Iodine. In Akan language, it means it is very difficult. Things are hard now. Even though it's raining, so the ground is very hard. Yes. So that is how it is. So let's go straight to the requirements. Please, it is not compulsory for the examiner to ask you all the 6 steps. He can decide to ask you in trenches. He can decide to ask you in bits. So first of all, you ask the first question that advise the preference shareholders, so preference and ordinary shareholders of their position in case of liquidation. In that case, they are interested in the step 1. That's the statement of liquidation. That is the one that they are interested in. Statement of what? Liquidation. That is all. That is what they are interested in. Statement of liquidation. B, propose a scheme of capital reduction that will be acceptable by all the stakeholders and prepare a statement of financial position as at 1st July 2013, immediately after the reorganization scheme has been effected. So that's all. Now, to start with the game, once you are doing statement of liquidation, I'll give you a clue. Yes, the shortcut. It says that Iodine Limited is a company that carried on a business as a distribution of music CDs. As a result of stiff competition coupled with poor management, the company has posted losses consistently for the past few years. The company has reconstituted its management team, which has put in place a new marketing strategy of door-to-door sales, meaning taking CDs to customers in their homes. The new management believes that the company will earn average annual profits before interest and tax of 2,500 million for the next 5 years, when corporate tax is assumed to be at a rate of 25%. The new management team is proposing a scheme of reorganization to reposition the company and make it a viable going concern. The company's statement of financial position as of 30th June 2013 was as follows. Everything is there. Now, let me give you the clue if you want to prepare designing the scheme. So first, we have to prepare a statement of liquidation. That's the very first step. So in statement of liquidation, as you did last time, write the name of the company, maybe question number, then this question 2 or so. Yeah, this question 2. Then write here a statement of liquidation. Statement of liquidation. You can say assets, but it's not other necessary. You can continue by saying assets. The last day, 30th of June 2013. Your reporting currency have to be two reporting currencies. It's in millions. 2 reporting currencies. Then you start by writing here proceeds. List all the assets. You see, if unless in the question, an investor or someone have decided to come and then buy all the assets at a go. That's the only way. All right, so list all the assets on the balance sheet, just their name without any figure. So go to the balance sheet, list all the assets. So this is the balance sheet, list all the assets, just the names. Please, if you see PP, don't write PP. Pick the breakdown. So go to the footnote and select the breakdown. There'll be a breakdown. Anytime you see PP, oh, you are. So these are the names. So this is what we want. Write just the name, land and building, furniture and fittings, equipment, and motor vehicles. So let's go and put them in our account. So tell the examiner that land and building, furniture and fittings, equipment, and then motor vehicle. So you list all the assets, virtually all the assets. Let's go back, continue the story. So the rest of the assets, they are on the balance sheet now. So for PPE, they own investment property, goodwill, and intangible. So let's go investment property, goodwill, and intangible. So right here, investment property. Investment property, goodwill, and intangible asset. Let's go and pick the rest. 11, inventory and receivable. Oh yeah, inventory and receivable. Then we are done. Just their names. List all assets. So that is inventory. Inventory. Then receivable. That's all. Go to the footnotes and pick their values. Please. The values must be in order. Now let me walk you through the order of the values you must pick. First, you have to pick them in the following order. So for liquidation values, we call this liquidation values. Number one, you pick what we call first sale value. First sale. Or breakup value. Or liquidated value. If this is not there, you pick what you call NRV, net realizable value, or net disposal value. Net disposal value. NRV or net disposal value. If you still don't have this, you proceed to pick the recoverable amount. Again, if you don't have recoverable amount, don't worry. Go ahead and pick the value in use. Finally, you have no choice than to use the fair value. It's the least among all of them. They are in order. So if the first is not there, second. If second is not there, third. Up to the number 5. All right, so let's go. So now let's go to the question. We are going to read and select the figures together. So now let's go to the footnote. Please go to the footnote. All these values we are talking about are not on the balance sheet, not in the financial position. All of them are hidden in the footnote. So go there and pick them up. So let's start with the note. The note starts from your note 1. The PP in the state of financial position comprised of the following. Okay, no problem. It says that it is ascertained that as at 1st July 2013, the land and building has a fair value of 2,500 million, but it could be realized NRV at that date for 1,600 million. So that's land and building, it should be 1,600 because you have a fair value and realizable value. I think the realizable value comes before fair value. Fair value is the last thing you have to pick. On the list, fair value becomes last. Realizable value is second. So ideally, we'll go and pick that. And it's 1,600. So record it here nicely. Now move again to the storyline. So the values in use of equipment and motor vehicles are 750 million and 800 million respectively. No problem. Equipment and motor vehicles have a realizable value, NRV. Value use, NRV comes before value use. So therefore, we'll take NRV. NRV is preferable much more to the value in use. So we have to use the 600 Ghana cedis is for equipment, 700 is for motor. So 600 for equipment, 700 for motor. 600 for equipment. And then 700 for motor. Now let's continue with the storyline. So that although the furniture and fittings has been recognized at its fair value in the statement of financial position, their for sale value is estimated to be 500 million. So for sale value is 500 million. So furniture and fittings for sale value is 500 million. So if you do it like this, they'll be telling you, you just have to put them in and that's all. Note 2, the investment property of the company has a fair value of 2650. No. But the for sale value is 2,300 million. Yeah, we need a for sale value. So that's 2,300 million. So that would be 2,200 million. That is what you have to pick. Goodwill is considered worthless. Please, there's N here. N means stop. They say goodwill is worthless. That means their for sale value is 0. So don't put the goodwill should be dash. So goodwill dash, don't bring any figure there because it is worthless, valueless. We don't get anything. We are not actually going to realize for any amount. And then that's all. All right, so basically that is it. Let's continue with the storyline. We'll finish very soon. It says that 20% of the trade receivables are irrecoverable. So what's the actual amount that is recoverable? That's 80% of the receivables. So go to the receivable and find 80% of it. The trade receivable figure here is 300, as you can see. So you multiply by 80%, because 20% is gone. Alternatively, you can find 20% of this figure and subtract it. Indirectly, the same as you striking 80% on that figure. And then that is all.
$240.
All right, so you basically show the working for us. That open a bracket, 80% times 300, and get 240 cedis. Then we continue the storyline. It's virtually interesting, not difficult at all. The next note says inventory can only be realized at 380. So inventory is 380. I'll put 380 for inventory. Say the recoverable amount of intangible assets is assessed to be 200. So I'm picking 200 for intangible and 380 for the inventory. So intangible is 200 and the inventory is 380. Let me write them all. All right, so I'll try as much as possible by putting all of them together. I'll do 600 plus 500 plus 600 plus 700 plus 2,300 plus 0 plus 200 plus 380 plus 240. So get 6520, right? So you get 6520. Call it total proceeds. Total proceeds distributed as follows. That's the total proceeds distributed as follows. That's the entire money we realized from the sale of all the assets. Now let's go and share the money. Let's go and share the money. So the next line, please, my board is full. That's why I can't write here. In your exercise book, I'm sure there will still be enough page. So just the next line. It's supposed to be total proceeds distributed as follows. Distributed as follows. Then the next line you write, as we did in class, we said that there are 5 to 6 classes of debts. Number 1, liability with fixed charge. So right here, liability with fixed charge. So check all the liabilities. Which of them carries a fixed charge? First, we go to the face. All the liabilities. If you check on the face of the balance sheet, you don't see them. Go to the footnote. Sometimes we hide it in a footnote. They say 15% debenture secured on PP. This is a fixed charge. This is a fixed charge. Because that debt was secured on a particular asset. It was secured on a particular asset. It was secured on a particular asset. All right, so let's go. So PP 15% debenture. Now you write 15% debenture. The amount is 4,005. Let's go. So write here 15% debenture. We're interested in the principal. 15% debenture. Please, they say it was secured on PP. The amount is 4,500. Let's see, can we pay all? It was secured on PP, so we have to add the PP amount together. And PP is made up of 4 assets. These assets are PP, so add all of them for me. The answer that you will get, let's see whether if it will be enough to pay off the 4,500. So let's add 1,600 plus 500 plus 600 plus 700. So I'm getting 3,400. So you realize that the 3,400 addition of all this. So what they tap the loan on will not be enough to pay the loan. So in that case, what will be the highest amount can you pay? You can actually pay, the highest amount you can pay should be the 3,400. That should be the highest amount you can ever pay. That's all. So when you go to the section, we'll key in 3,400. Even though the debt is what? 4,005. Please write it at the second column. First, the first currency. Write it here, so that should be 3,400. So that should be 3,400. How we get that? Good.
Please, can you take the debenture aspect again for me?
All right. So now with the debenture is 4,000. We have taken a loan of 4,500, and it has been secured on PPE. But when we sold the PPE, we realized only 3,004. So for now, this is the highest amount we can ever give it to them, 3,004. Even though we have more money from other assets, we can't take any money anywhere until we are done with the secured debt. So now we can pay 3,004. Now left with what? 1,100. Now this 1,100 forms part of the unsecured liabilities, because whatever you take your loan with gave us 3,004. So we can give you that 3,004. The remaining money, not that we will not pay, we will pay, but to become a normal debt to us, not a debt with a senior character. And that's all. All right, so here, what if the PPE, after selling the PPE, we had something like 5,000? That one, it doesn't matter. It means we can pay the entire 4,005. The 500, leave it. Doesn't go anywhere again. The 500 doesn't go anywhere again. So that is it. So now, in this case, we can only record what the asset can pay. The rest becomes unsecured liabilities. We are done. Number 2, liquidation expenses. Liquidation expenses. Liquidation expenses. Now, with the liquidation expenses, you check the question, the footnote. So if you continue reading the footnote, you get to a point. That's the cost. Liquidation expense expected to be 40 million. You see it here. That's the next footnote. And reorganization expense is 30. Please, we are looking for liquidation. That's all. That will be 40. You put it in. Please, as and when we are going, you'll be checking the money. The money we have is 6520. Wherever we get to and it finish, we have to end the story. It's in order. Although in reality, the Supreme Court have ruled that liquidation expense should be on top, but per our syllabus have not been updated, so we are still going by this approach. Take notice of that. The third one is called preferential liabilities. Preferential liabilities. or preferential creditors. Examples of preferential liabilities, they are statutory owing, like Senate, GRE, taxes. It includes wages and salary in arrears. If you're owing employees, this is also part of it. And then that's all. In this question, we don't have, so you put dash. Number 4 is liability with floating charge. Liability with floating charge. In this question, let's go and check whether we have a liability with floating charge. These ones are normal ones. Again, go to the balance sheet and check from there. Bank overdraft carries a floating charge, so you have to pick that one, 500. So bank overdraft. If it has not been indicated, don't come and bring it. It's not always bank overdraft is a floating charge, please. And it's not always the debenture will be a fixed charge. Let them tell you. If they don't tell you, you can't. Okay. Now let's continue the story. Now, before you go to the unsecured liabilities, you add all. We are done adding all together. So get 3940. Take it off and know the balance left for the unsecured liabilities. How much left for them? So we are taking 39 from the 6520 over here. Please, it's one statement too. It's just a one statement we have to do. So get 2580. If I take it off, I'm getting 2580. We call it balance left for unsecured liabilities. Balance left for unsecured liabilities. Balance left for unsecured liabilities. That's all. So you start with your unsecured liabilities. All the liabilities left Now list all the liabilities. So go to the balance sheet. All the liabilities do not touch. We have not touched these two. They are called unsecured. But there was nothing written against them. That is why they are not secured. Plus the debenture. Please add this first. Write them somewhere. The remaining balance of the debenture, which is 1,100. The trade payable, which is 1,002. Accrued expenses, which is 400. Sum them up. If this answer is much more than the balance left, then you have to prorate it. So 1,100 plus 1,002 plus 400. I'm getting 2,700. Let's go and check whether it's much more than the balance left for them. When I check, it's much more. 2,007 is more than 2,005. Hence, this money will not be enough. So we have to prorate it. So now they have to share this money according to how much they owe you. So when you write here, the 15% debenture, you open a bracket. It was 1,100 divided by 2,700 times 2,580. That's all. All right, so if my calculator will be correct, 1,100 divided by 2,700 times 2,580 should give me 1,051. So I'll put it here that I'm getting 1,051. I'll go to the trade payables. Yes, that one also I'll add. Trade payable is 1,200. I'll divide it by the 2,700 times how much they are sharing. So at the end of the day, I'll get 1,002 2,580 times 1,200 divided by 2,700 times 2,580.
1,147.
1,147 to the nearest whole number. 1,147 to the nearest whole number. The last one is accrued expenses. Space will not permit me. Let me do that one on the next sheet. Just some few points down before I move on to the next sheet. Space won't permit me. All this should be in one account. All right, so let's go to the game. So the next one is accrued expenses, which is 400. So accrued expenses, which is 400. So you open a bracket, 400 divided by 2,700 times 2580. If my calculator will set me right, will get it right for me. 400 divided by 2,700 times 2580 should be around 382. So 382. That's the answer that the federal government is getting. So that should be around this area. Add everything together. Don't waste your energy. You get the same answer, 2580. Subtract everything from it. The answer is 0 because it's available. Available to preference and ordinary shareholders. They are getting nothing. End the story here. Once they are getting nothing, don't continue. If there's some remain, preference shareholders take their money. Preference shareholders take their money first before ordinary shareholders. But here you are, there's no money left. So that is all. Now, right after this, you can just give a conclusion for this 5 backup question. You can conclude that preference and ordinary shareholders will lose everything. All their investments will go because they are not even getting 1 cedi. And that answers the question. 5 marks, you are done. But for teaching purposes, I'll go further. It said advise preference and ordinary shareholders. Preference ordinary shareholders. Their position in case of liquidation, they get nothing. They are getting 0. So no money left for them. Hence, you are done with your case. But I will not finish it there. So I'll prepare what you call position of the key stakeholders. There's something called position of the key stakeholders. Position of the key stakeholders. Now you write the stakeholder here. Stakeholder. You write the position before. The position before is the balance sheet figures. Write a position after. That's the liquidation figures. This is the loss per liquidation. So this each stakeholder. Loss per liquidation, please. loss per liquidation. Now, to get the stakeholders right, start by saying ordinary shareholders. Ordinary. Preference shareholders, list them like this. Then go to the liabilities, all the debts, write them here. Debenture, 50% debenture, all the liabilities, write them here. And trade payable, trade payable, bank overdrafts, next. Accrued expenses. Let's start writing these figures. Then you check whether there's preference dividend in arrears. Preference dividend. Sometimes they'll be owing dividend. They bring it. So let's go and locate these figures. What is the preference and ordinary shareholders fund? Their figures. Check the balance sheets. So I want to see preference and ordinary shareholders. So ordinary shareholders is 8,000 before. Preference shareholders is 1,500. 1,500. So this will be 8,000. Don't forget the reporting currencies in millions. 1,500. The 50% debenture is 4,500. Remember, trade payable is 1,200. Bank overdraft is 500. Accrued expenses is 400. Now, 11 there, dividend. Let's go to the footnote. Check the last but one footnote. You see, they thought that they have not paid dividend. So get this thing clear. Obviously, they say preference dividend is in arrears for just a second. So the preference dividend are 3 years in arrears. They've not paid for 3 years. So go and check 1 year dividend and multiply by 3 years. That's all. So now, check the balance sheet. So the 12% cumulative preference shares. So you multiply 12% by 1,005, that becomes 1 year. So 12% times 1,500 is for 1 year dividend. And it's in arrears for how many years? 3 years. So we calculate. One year is 180 times 3. That will give us 540. 540. So this is 540. Now position after is how much we give it to them in event of liquidation. It was 00. Debenture, let's go and add the debenture figures together. You know, debenture appeared 2 times. Debenture appeared here as a fixed charge. It appeared here as a unsecured. So putting these 2 figures together, that's 3,400 plus 1051, 4451. So debenture featured in 2 times. Trade payable also appeared to be 1147. 1147. Bank overdraft, they had their money intact, 500. This one they had 382, but they also had 0. Now let's get the loss per liquidation. The loss per liquidation is your position before minus the position after. How much are you losing? Virtually, they're losing the entire 8,000 million, entire 1,005, 4,500 minus that will be 49. $53, 0, 18, and then 540. You add everything together. Get 10,160. That's the total maximum loss. Of course, we can't conclude here. We have to go and do the determination of maximum loss to know whether we should liquidate or we should reorganize. All right, so here you can write a report on this that in event of liquidation, bank overdraft will lose nothing. They'll get their money intact. All the preferred dividend in arrears, they will lose the money. Debenture holders will lose 49 million, whilst ordinary and preferred shareholders lose all their money. And then that is all. All right, so let's go straight to the next line. So the next step we have to do is look for determination of maximum loss. What is the meaning of maximum loss? So we call it determination of maximum capital loss. You see, tell the examiner that maximum capital loss refers to the total or the overall loss, overall what the entity must delete from the books in order to become whole. So what are the losses you must clean from the books before the entity can be revived? That's all. So if we are to reorganize, what is the entire losses we have to clean from the books? That's all. So what are the total loss? Here, the format is very simple. So the total loss can come from three areas. Total, maximum loss can come from one. I have what you call recorded losses. Recorded losses on the balance sheets. And unrecorded losses, of course. You see, even it's natural when people are struggling, it's not everything they showcase it. So when the company is really struggling, it's not all the losses that will appear on the balance sheet. So please, those companies who have collapsed, if they are to show all the losses, in fact, you see, like the way when the COVID came, the one, China, where the COVID broke, they recorded the highest death toll of 80,000. While other countries who got the infection later on recorded over millions of people being affected, thousands and hundreds of thousands of death toll rising here, not knowing the Chinese government does not release the true information because it will worsen the case. That's how it is. So when companies are really struggling, not every loss they will account for it. Some of them, African proverb will say they will close their eyes on it, meaning they will not capture it. But because we want them to be very clean, sparkly clean, crystal clear and neat, all those losses will bring them to books. So you may have the losses that have not been captured on their balance sheet at all. Now let me give you losses captured on the balance sheet. You can have losses on assets, losses on equity, and sometimes losses on liabilities. Unrecorded losses can be seen as what? Dividend in arrears, dividend, and then the last one is sometimes reorganization expenses. So now let's start. This is how the format goes. So right here, determination of maximum. Right here, assets. Right here, book value or carrying amount. Right here, going concern value. The right here, maximum loss. Yeah, list all the assets again. So you can just go back and copy the assets is listed here. Go back and copy. Or this time around, if you are listing the asset, it must come with their figures. List all the assets with their book values. You are free to copy the book values. So first of all, PP, don't forget the PP, there are notes in the footnotes. So there are notes talking about PP. So please, PPE figures, land the building, this time around, you are free to pick all those figures attached to them. So land and building is 3,200, and then the rest. If you check on your material, you can get all these things there. First, land and building. Is 2,200. Motor vehicles, 900. Then go and pick the remaining assets from the balance sheet. So from investment property to from investment property to receivables. So investment property is here 2,500. Let's go and pick it up. From the good one. Alright, so you list them and then go and pick the going concern figures. You are done. Receivable is 300. Inventory is 700. Now let's go for going concern figures. Please. The going concern figures are directly opposite liquidation figures. Now, going concern figures, they are directly opposite. They are in the footnote. Going concern value should be 1. Turn the thing upside down. Fair value would rather come first. Number 2, value use. Alright, so this is recoverable amount. followed by number 4, NRV. Then the last one is for sale value. So that's all. So let's go to the footnote and be picking those figures. And then we'll put the pieces together. And most of the important work has to do with the step 1, 2, and then the 3. Now let's go to the footnotes. Note 1. Says that it is ascertained that on 1st July 2013, land and building has a fair value of 2005. I'll not continue. We want the fair value. Land and building fair value is 2,500. And say value in use of equipment and motor vehicle is 750 and 800. But their realizable value is no. Value in use comes before realizable value in terms of what? Fair value or going concern. All right, so that is that. All right, so continue from where we left off. With that of the value in use of equipment and motor vehicles is 750, 800 for motor, and then 750 for equipment. That one come before what? Realizable value. So let's take notice of that. So 750 for equipment, 800 for motor, 750 and 800. So 750 for equipment, motor vehicles 800. Then we continue the storyline. Now continuing the game, say although furniture and fittings has been recognized at its fair value in the statement of financial position. So the fair value is in the balance sheet. Go and pick that one. So furniture and fittings, the fair value is what? Is a fair value. And that's what we want, 700. Now let's continue the storyline. Investment property had a fair value of 2650. So no two ways about it. 2650. Goodwill is worthless. So from here going, we know it already. Goodwill is worthless dash. The trade receivable, 20% of the trade receivable is irrecoverable. So you bring it and then you continue the rest of the story. Goodwill be dash. The intangible asset had a recoverable amount of 200. Inventory. Okay, I think we have interchanged these figures. All right, so inventory happened to be 700, and this one is 300. This is 380, and this is 240. That's all. Now let's all take our calculator. Let's do the mathematics together. We are going to find the maximum loss. To compute the maximum loss, all what you have to do is to compute the maximum loss, all what you have to do is this. You subtract. So 2,200 less this answer. So 2,200 minus 2,500 will give you maximum loss. So you take a calculator nicely. So 2,200 less 2,500. That will give us negative 300. So please put it in brackets. It represents a gain. The fair value go beyond the book value again. Because we are interested in a loss, we are netting all the gains against the losses. So you can get a net of all the losses. Furniture and fitting is the same, so the answer will be dash. 800 minus 750 will be 50. 900 minus 800 will give us 100. 2,500 minus 2,650, that should give us 150 negative. 400 minus that should give us 400. 500 minus 200 will give us 300. 700 minus 380 have to give us 700 minus 380. That should be 320. 300 minus 240 will give us 60. You sum all this up for the meantime. Minus 300 plus 150 minus 150 plus 400 plus 300 plus 320 plus 60. So we are getting 780. So total loss from asset is 780. It is called total loss from asset is 780. Then you proceed to the next line to do losses from equity. So let's go to the equity, the balance sheet, to bring back losses from equity. And then that is all. Okay, so let's go losses from equity. But let's go to the equity and go to the balance sheet. All items apart from stated capital, bring it. So we have only income surplus negative, is the loss, bring it, 7,100. So continuation. Income surplus. $7,100. Then bring the dividend in arrears. It's in the footnote. Dividend in arrears, 540. Then bring reorganization expenses from the question. Last but one note, reorganization expenses. Yes, it's reorganization at 30. You see, the items are many. You need to be very fast. Now you have to be very truthful. Here we are testing speed as well. Reorganization expenses. Is 30. You add everything together, starting from the total loss from the assets, 780, from the other page. And then that is all. So 780 plus 7,100 plus 540 plus 30, that'll give us 8450. 8450. 8450. That's the total maximum loss. So this is the total loss they have to claim before the company can be whole. This is the one that they used to determine. So check whether they should continue the reorganization. So the question, should they reorganize or they should liquidate? Should the entity reorganize? Anytime they ask you that question, they want the step 1 and 2. Should the entity reorganized or liquidate? Should the entity reorganize or they should liquidate? Now you check. This is the loss per reorganization, 8450. Let's go and see the loss per reconstruction. Sorry, loss per liquidation. This is a loss per liquidation, 10,160. If they should liquidate, all the losses should be 10,160. But if they should do reorganization, the loss is 84. So therefore, the entity should reorganize. Since the loss is cheaper. It's cheaper over here because comparing 8,400 to 10,000, you save money. So now, from here going, it's very short. Within some few minutes, we'll finish with this question. The most difficult aspect is the very first two steps. That is where the challenge lies. And then we move. All right, so basically, that is that. If you have a question, you kindly ask. Yes. If you have a question, you kindly ask. Then I move on to the next stage of the story. I'll be moving on to the next stage of the storyline. So we've done 2 steps out of what? 6. And these are the critical ones. The rest of the 4, we'll finish it right now. Let's go. Step 3 is share of maximum loss. Third examiner, share of maximum loss. Share of maximum. From here going is discretional. So here we have to share the maximum loss, discretional. Whatever you say, it is final, provided that you follow the required principle. If you don't follow the principle, that is where we will not understand. But if you follow our principle, there will not be any problem. Here we are only interested in those who follow our principle, not those who follow their own principle. That is all. Right here, stakeholder. Right here, loss per liquidation. Loss per liquidation. And it's a share of maximum loss. Share of maximum loss. So recall the stakeholders again, ordinary shareholders. %15 debentures. Trade payable. Bank overdraft. Accrued expenses. The preferred dividend will be ordinary share, lost by liquidation. They lost 8,000, all the money. They lost 1,500. The venture lost, I think 49 or so. Let's go. I provided some tables sometime. Good. 8,049. Trade payable 53. These are the table. I'm recalling these figures. This side are those areas I'm recalling. Venture is 49, trade payable is 53, bank overdraft is 0, accrued expenses is 18, preferred dividends is 540. It gave us a total of 10,160. Please, whatever we are going to do, it is discretional, meaning whatever you say, it is final. Provided that you follow the principle, of course. There's a principle behind. What you say is final. Now record the total of the maximum loss we calculated. 8,450. Share the loss. Share the loss. The loss is 8,450. Now we are going to share. We have the rules. Rule number 1, when you are sharing the loss, rules for sharing. Number 1, make sure that no one loses much more than in event of liquidation. That is why we brought these figures here as a benchmark. None of these figures here should be much more than here. That's all. The thing is discretional. Whatever you do is correct. But the rule says that make sure that you don't go and annoy an angry stakeholder. So, for example, there shouldn't be any situation where a figure will be here. You are sharing this 8,450. That figure will be more than what is here. That one will not agree. That's the first rule. So, for example, the bank overdraft is 0. Here you have to put 0. Even if you put 1 cedi here, you are wrong. If you put 1 cedi, you are wrong because the guys were not losing. So for your scheme, they should also lose any money. And that's all. All right, so basically that is it. So get a rule. Rule number 2. Make sure that ordinary shareholders take the highest loss, or they should bear. They should feel the pain. Ordinary shareholders should feel the most pain. That's all with the rules. If you're okay with these 2 rules, now let's start. Please, whatever I am doing here is to my discretional view, my opinion. Your opinions are welcome, provided that you follow our principle. We have no problem with that. So don't say there's one way. No. Now, you see, to my opinion, we are struggling. And dividend, we've not paid dividend in arrears. Oh yeah, let's cancel the dividend. So I am scrapping off all the entire dividend. All the entire dividend. You see, I have solved this question several times on YouTube. And anytime I solve this question, I adopt a different style. We end up getting the same balancing figure because the style you adopt doesn't matter. If you follow the principle, you balance it right for us. So today I'm using a different approach. Now, whatever left, I'm asking the ordinary shareholders to lose it. So how much left for me to share? Discretional to me. I'm just asking the ordinary shareholders that if they can bear with me and then bear the remaining loss, I'll be very grateful. So that is 7910. Someone can decide to bring 10 cedi here, 40 here, 30 here, at least 500 here, the rest comes here. It is your discretion now. As long as the figures over here are not more than the figures over here, you are right. And as long as the ordinary shareholders, they are bearing the highest loss, or they are feeling the most heat, oh, you are okay, you are free to go. That's the rule. Of course, let me put 0 at the bank overdraft before. Now, 117910. I'm deciding that ordinary shareholders to bear all this loss. So 79 discretional. So 7910. And I will make it available several forms of the same question that we solved on the YouTube there. Quite different issues. So the rest will be 0. I'm not giving anything to preference shareholders. I'm here to 0 and 0. It is a discretional view. Hey, you can also decide to give preference shareholders 500. It's not a problem. You can decide to give these 49 people, at least they should take 20B. 53, they should take 25. 80 should take, let's say, 10. It's okay. But the bank overdraft, don't put any figure at the bank overdraft too. But then if you put any figure, they will get annoyed. So I'm done. So let's maintain it this question and we are done. Let's go to the next stage. Step 4, resource requirement. That's all. We're almost done with the step 6. Resource requirement. Resources or capital requirement. Capital requirement. Capital requirement. Now here it's about receipt and payment. It's about receipt and payment. That's all. So write it down, the receipt and payment. So let me divide it into 2. Let me put a receipt here. Let me put payment also here. List all your payments. Number one, we have onerous payments. These are debt that, in fact, they are long overdue. You have to pay them now. These are debt that you have to pay. These are the debt that you have to pay them. Now, first, reorganization expenses. Bring reorganization expenses. We said it was 30. And then you check the current liabilities. Pay all and leave one. Please, use your discretion now. From here going, the current liability, you can decide to pay all and leave what? One. So current liabilities, what are they? Trade payables, accrued expenses. For me, I'll pay accrued expenses 400 and leave the rest. Yes, I'll leave the rest. So I'm only paying one. You can also decide to pay two, but please don't pay all. Please don't pay all. Leave some. So I'm writing here accrued expenses 400. Then write your working capital requirement. That's one of the dangerous workings we are going to do. Working capital requirement. In event where you cannot do it, don't worry yourself. In event where you cannot do it, don't worry yourself. Write any figure of your choice. Probably your date of birth. 1944. Yes, that's my date of birth. You put it there, 1944. Then come and write here new plant or new PP. Just tell them at your discretionary view that they should buy a plant. By force, they should buy an asset for production. That one will be correct. They'll mark this one correct for you. They'll mark this one down so that it will come and compensate the loss. To serve as compensation. But now let's go and calculate it. You will do it in exams. So workings. First, working capital. First, we need our assets and liabilities. That's all. Under the working capital, we need assets and liabilities. So the working capital requirements, two things you must do. Write your current liability versus your current asset. That's all. First of all, the current liabilities, you see, there were 3 in number. And we have paid 1, left with 2. So bring the 2 left. Left with the trade payable. And bank overdraft. That's the only current liability left. This is 1,200 million. And this is 500 million. Add them and get their total. That will give us 1,700. No problem. That's the total. Now go to the question. They will tell you something in the question. They'll give you a ratio, working capital ratio. It's not always they'll give you a capital ratio. Check most of our questions. We have done diverse schemes. So read this side. Let's go to this side. It says what? The reconstituted management team desire that Iodine Limited should maintain a current ratio of 2.5:1. So that means the current ratio should be 2.5:1. So the current liability should be 2.5 times the current asset. Or current asset should be 2.5 times the current liability. Yes, that's what it tells us. So it means that to get a total assets, to get total current assets, you just have to multiply the total current liability by 2.5. That's all. So go ahead and list your current assets. Please, you can get all these figures from going concern figures. From henceforth, all the figures you want, they are there. Go to the going concern figures and pick for inventory. So we are picking for inventory and receivable, these two figures. Inventory and receivables are here, these two figures. 380 and 240. So inventory and receivable. So right here, inventory, 380, receivable, trade receivable. That'll give us 240. Right here, cash, aka the balancing figure. Underline it. The total current assets, you can find it. Open the brackets. It's 1,007 times 2.5. You see, let me do something for you. Current ratio, I'll go back for you to copy. Current ratio is equal to current assets over current liability. Forget about the H21 for now. Make current asset the subject. To make current asset the top the subject, you multiply by this. So if you multiply the current ratio by the current liability, it should give you the current assets. That's the same approach you're using here. So the 1,007 times 2.5 will give us something like this. $4,250. So this will be 4,250. Then we now less the remaining assets, less 380, less 240. So 3630. 3630. That is the working capital. What a wow. If you like, try using any other method, still get the same answer. 3630. So come and put it in like this. Working capital is 3630. That's all, and it get a total. So this is a total payment. Now left with the receivable. Who will bill? Who will be willing to pay off all this money? You see, these are the money that we need, because if you are doing revival, bombish, you make payments. You have to be injecting money into the business. So I'm getting 40, 60. 40, 60. So now 11, who will be willing to pay this money? Let's go to the question. Sometimes they'll give you a clue. They said that the ordinary shareholders were willing to introduce any additional capital necessary to achieve the desired working capital. Oh, okay. So they said ordinary shareholders, they are ready. They will pay the bill. So right here, ordinary shareholders. Anyone who is ready to pay the bill, write their name here. Ordinary shareholders. Ordinary shareholders. So they will pay everything 40, 60. If this side has not balanced, your balance sheet will never balance. So that's all. We are done. Left the proposed scheme. What left? It just left with 5 to 10 minutes. We are done with the entire question. And that's all for designing scheme. This is workings. You come here, if jot some few points down, then I'll do the last 2 points. This is the step 4. Left only 2 steps. And we are done with the storyline. All right, so let's go. Now let's go. Step 5 is the proposed scheme. We'll finish everything right now. Proposed scheme. Proposed scheme. Let's go. This one is a story they are going to write. Take all the key stakeholders and start writing a story. Please. We don't want plenty sentences. We beg you. Just the shortest sentence ever. Get it for us. So write the names or write all the key stakeholders. Who are they? They are here. So you can start saying number 1, number 2, number 3, number 4, number 5, number 6, number 7. Please, maximum point you must write is between 5 and 7 points. It's enough. So point 1, ordinary shareholders. So number 1 should be ordinary shareholders. you underline. Ordinary shareholders. So here, what they must lose, what they must bring, that's all. So how much are they losing? Per my scheme, they are losing 7,910 million. Per me, my scheme, this is how much they have to sacrifice. So per the scheme I have designed, ordinary shareholder, they have to sacrifice this money. How much should they contribute? They should bring money. They should bring 4,060 million. That's all. So write this in a sentence form. Simplest ever. So tell the examiner that the ordinary shareholders must agree and do what? Waived off and waive off how much? Ghana city of 7,910 million. $7,910 million of their investment and subscribe to new shares amounting to Ghana city of 4060 million. Please add million to it. Full stop. That's all. Go to number 2. Preference shareholders. Write a shorter story about them. Preference shareholders, for them, you see, for them, they don't lose anything. No. Per my scheme, on the YouTube there, the earliest questions I solved, the same question, I make sure that they lost something. Per my scheme, they are not losing anything. So don't come and say they are losing something. No. The only thing that they are losing is a preference dividend in arrears. So tell the examiner the preference dividend in arrears must be cancelled. So tell the examiner the preference dividend or the preference dividend in arrears must be cancelled. That's all. You are done. Then you go to your notes. So you do like this, up to 5 to 6, you are done. Don't write plenty. All right, so let's go. At least when you write something small, you stop. Let me write number 3. Who again should we talk about them? 15% debenture. Tell them that it will be secured on, so form a sentence, tell them secured, it will be secure on, it will be secured on the PPs, that's all. So the 15% debenture will be secured on PPs. Trade payable. The third examiner that the trade payable will be paid in 6 months' time. Now, in this question, I'll suggest something of your choice, but it must be something laudable. Trade payable will be paid in either 3 equal installments, 3 equal installments. Starting from where? Starting from the next 3 months. Number 5, the bank overdrafts the rest. So all the items, one after the other. Accrued expenses. Third examiner will be paid. Goodwill written off. Some of the notes you can copy from the question. Let me show you the notes you can copy. So the rest, go and copy these notes from the question. So number 6, come and copy these notes. Some of these notes you can copy them dito. Goodwill will be written off. That's notes. The next one you can copy. Then reorganization expenses will be amounted to 30 and will be paid. Current ratio of the new firm will be 2.5:1. All these are part of the story. Copy them. You copy all of them back again. Then, so you copy there a lot. Then the non-current assets will be stated that they are going concern figures. So here, take notice, goodwill will be written off. Third examiner written off. And then the rest. Number 7, you talk about current ratio. Number 8, you talk about yes, then the non-current assets, you must also write it. Inventory and trade receivable, all of them. So the assets will be stated at their what? They are going concern value. Then number 10, it tells us that the scheme holds a promise of future profit. The scheme holds a promise of future profit. That's all. So I'm done. Now let's go into the last stage and we are done for the storyline. The last stage is called the resultant statement of financial position. Now, this one, it should be your last sentence. It means the scheme holds a promise of future profits. Meaning that when they implement this scheme successfully, in the near future, they'll get money. Things will not be bad again. They've now entered into their greatness. That's all what we are trying to say. Now let's go to the last stage of the game. We call it resultant statement of financial position. So for the name of the company should come Iodine. Iodine Limited. So right on top, Iodine. Iodine Limited. Right here, resultant statement of financial position. Third examiner just after the scheme. You can bring the date or leave it. The reporting currency is in millions. Please, when they move, you move. When they stop, you stop. Follow the ladder. When they move, you move. When they stop, you stop. That's all. So follow their balance. This is within the next 5 minutes you need to finish. When they move, you move. They start from PPE. You must also get your PPE right. So let's go and get our PPE. So when they move, you move. Every figure on the balance sheet should come from going concern figures. So that's why I said that all the figures you need, you've come across them already. So pick your going concern figures. So right here, non-current assets. Property, plant, and equipment. Now go to the going concern figures and add the PPE figures. These are going concern figures. PPE is the first four. Put them together for me. These are the PPE. So let's go. 2,500 plus 700 plus 750 plus 800. You must show working. Almost show working. So I'll do this way. 2,500 plus 700 plus 750 plus 800. Close it. I'm getting 4750. When they move, you move. When they stop, you stop. Continue the journey. Follow the letter. Follow their format. From there, they went to Goodwill. Goodwill is written off. It's gone. Intangible assets. No, they went to investment property. Investment property, we had 2,500 or so. Let's go and pick it. The going concern value for investment property is what? 2650. That's all. And you can decide to throw the question paper away. Investment property. 265. Go and check whether they are aligned. Whether they added. If they add, we also add. Yes, they added the total non-current assets, so you must also add. All right, so they went to intangible before they add in it. Intangible is 200. Now we can add. Goodwill is gone. Yeah, the tail end of the story. So 4750, 2650 plus 200 give us 7,600. Current assets, inventory. Going concern figures is 380 for inventory. The next is trade receivable. Trade receivable is 240. Cash into working capital. We had 3630. Let's confirm that. Yeah, it's there. So that's all. Now balance up. Add only the current. Check what they did when they move, you move. So they added the current asset together and now they get the total. You must also add the current asset, just the current asset. 36 plus 380 plus 240. That's 4250. Now you see total assets. So you add the current asset to the non-current assets. The non-current assets 7,600. So plus 7,600 will give us 11,850. Now come to equity. Right here, ordinary shares. Their value is 8,000. And I ask them to lose 7,910 and ask them to bring 4060. All these figures, we have come across them. So I'm getting 4150. Just write for preferences. Okay, so the next one we continue. All right, so you continue with your other local liability. Debenture. %15 debenture is 4,500. We go to current liabilities. Paid payable, 1,002. Bank overdraft, total liabilities, $1,700 plus 4,500. That is 6,200. Then total equity and liabilities. So equity is here. You add it to it. So answer plus 5, 6, 5, 0. 11,850. We're done. For this question now. On that note, we are done with this question. For this, a past question 2013. And we are done with it fully. What a wow. So once it has balanced nicely, everything is dealt with. So we are done with how to design a scheme fully. And if you have a question, you kindly ask. If there's no question, we'll end the section here and continue again next time. Thank you very much for coming. And remove. Any question for me? All right, so that is it. Okay.